Hello everybody, and once again welcome to Sinanomics. It's a beautiful sunny morning in Melbourne here, and last night there had been major developments. A lot of countries have actually published their economic data, so I'll a little bit cover on that today. So before I come to that, for the month of May, Dow was in the negative territory, S&P 500 was at 0.5% positive, and Nasdaq was at 6% positive. Having said that, some of these AI stocks actually closed in the negative territory yesterday. So a lot of people are taking some profits, which is very healthy, because on one way it was running like crazy, 35% up in one day. So definitely a good break on that is healthy. US actually released its job data, and that was pretty strong. 358,000 jobs available, wage growth, and also the housing prices are growing. So that's all of that is actually indicating towards a booming economy in US. And on the other hand, everybody is worrying about recession. So the negative part of that is now Federal Reserve, who was thinking about pausing the interest rate in June, now they have started thinking about increasing it further. Having said that, looks like the market is immune to that. They don't really worry about it, whether they increase it or reduce it. The market is pretty fine. They're going ahead with the business as usual scenario. Again, the House of Representatives have passed the debt ceiling bill rather, with a whopping 341 in favor versus 117 in opposition. Having said that, this was obvious, right? Number one, because had this not been done, US economy would have been in mess. Who will take that blame? Republicans will not take that blame, right? They just wanted to put some pressure and force the government to cut the spending. So it looks like they have achieved their goal. Having said that, on one hand, US is funding all this war. If I'm not wrong, they have funded so far $75 to $80 billion so far in Ukraine. On the other hand, they want to increase the debt ceiling to pay for the government spending. So it's funny. Now it will go to the Senate, and after that Joe Biden will sign it. So pretty much it's a done deal. Having said that, the market did not react much. Looks like they had factored it pretty much that is going to happen. So pretty booming economy, or stronger economy in US as we were anticipating. Whereas on the other hand, China has also released its manufacturing PMI data, which is actually a very strong indicator from the manufacturing perspective. It's Manufacturing Purchasing Managers Index, PMI. And this actually indicates the contraction or expansion in the economy. And the bad news is that it's worse. So it is 48.8 versus 49.1 in April. So that means the economy is contracting from the manufacturing perspective. And now amid these two, India has actually released a surprisingly high GDP growth rate of 7.2%. In the last quarter, January, February, and March, it came at 6.1%, which was expected to be around 5.1 to 5.5%. And that has brought India at 7.2% growth rate for FY23. So from the GDP perspective, let me put things in perspective for you at the world scenario. So IMF actually has been forecasting the world economy will slow down and their GDP will actually come down from 3.4% in 2022 to 2.8% in 2023, and then it will further improve to 3% in 2024. So it will slow down. When I break this up into different countries, so from the developing countries, it's pretty much flat. From 4% growth in 2022, it will be 3.9%, so pretty much flat. For advanced economies, it's a little bit worse. 2022 was 2.7%, and this year's forecast is 1.3%, so almost half. And when we look at individual countries, US will be at 1.6%, Australia will be at 1.6% growth, UK will be negative 0.3%, China will be at 5.2%, and India was forecasted to be at 5.9% growth, but actually India has delivered 7.2%, which is quite amazing. It's good actually. That shows India is the fastest growing economy today in the world. Since we are talking about GDP growth and all those, I like to focus your attention towards GDP, especially for some of you who are not very clear about it. What is gross domestic product? So let me explain that to you in simple terms. So gross domestic product of a country is basically the monetary or the market value of all the finished goods and services produced in that country for a specific period of time. So it can be quarterly, it can be yearly, depends. Normally we measure that yearly. And gross domestic product actually is made up of 4 things. So GDP equals, according to that formula, C plus I plus G plus NX. And I'll explain that to you. So C is the private consumption, I is the investment, G is the government spending, and NX is the net exports. So export minus import. So these are the 4 factors which actually makes GDP, gross domestic product. And there are different interpretations for that, whether investment is growing or private consumption is growing, etc., etc. But this is what it is. So India actually had $272 trillion gross domestic product in FY23. Sorry, 272 trillion rupees. Nobody has $272 trillion, by the way. Apologies for that. So 272 trillion rupees is their gross domestic product. If you convert that in US dollar, it comes as 3.4 to 3.5 trillion dollar. So clearly it's right now the 5th largest economy. Let me also explain to you that there are 2 parts to the GDP. One is the nominal GDP, one is the real GDP. The one that we have been talking about, 7.2% and all the IMF data, they were actually real GDP. So there is something called nominal GDP. So when you look at the gross domestic product at the current market price, it's considered nominal. When you look at the price which doesn't includes the price increase. So for an example, if you're looking at the gross domestic product without the inflation, without the price increase, then it's called the real. So once again, I'll repeat that. So nominal is when we look at the gross domestic product at the current price, whereas the real GDP is the one where the price increase is not factored in. So simplistically, nominal GDP equals real GDP plus inflation. So India actually had 16.1% nominal GDP and 7.1% real GDP, 7.2% rather. So pretty much the difference is the inflation. Another very important term that is being used is also GDV, gross domestic value add actually. And this is all the value add from the producer's perspective. So if you look at the GDP, we only talked about consumption, right? Private consumption, government spending, etc., etc. So it's all about consumption side. Whereas it's also important to see what's happening in the production side. And that's where GVA is important. Gross value add. And gross value add actually grew was pretty much 8%. So that was quite healthy. So with this kind of analysis and a little bit of knowledge, I'd like to thank you all for watching. Once again, thanks for your support and love. Don't forget to like it, share it, and subscribe it. And I'll see you again tomorrow. Till then, it's bye from your friend Pankaj Sinha. Bye-bye.